Okay, very good morning to everyone. Tuesday the 19th of September. Firstly, just taking a quick look at the close on Wall Street last night. A record finish again, the S&P up another 0.15%. So in terms of the actual value, was 2,500, just shy of 504 points. The Dow likewise up 0.3. The Nasdaq was a slight underperformer. A little bit of underperformance in the tech sector overall, but generally speaking still up there towards these all-time high valuations in the equity market. But going into what's happened this morning and what the charts are looking at, there's been a couple of notable news developments that we're going to cover this morning. However, I thought it'd be prudent just to jump in and look at things as they stand, and then we'll have a bit of a recap of the sterling movement that was seen late yesterday afternoon on the back of some comments from Mark Carney, the Bank of England governor. Just looking here, the DAX, just keeping an eye on centre left chart, it's just printing a session low here at the moment. You can see there just testing the initial move down that we saw in the futures market at the cash open at 8 o'clock. So maybe just worth just keeping an eye on that while I'm talking. You've also got the low from yesterday seen, which was kind of that gap fill, if you like, from the move that we saw, the recommencing of trade for this week. Elsewhere, gold's exactly flat at the moment, but in the currency markets, overall, what appears to be more a case of a little bit of dollar weakness rather than anything more specific to the pound and to the euro currency. The dollar index is trading down about 0.2%, so consequently both major pairs are in slight positive territory. Just wanted to bring into shot, I hope Michael doesn't mind me sharing this. Hopefully you'll be able to see it if I just transition my screen. Again, the euro move higher, I don't think there's anything, certainly from a fundamental perspective, to pin that on. However, as you can see here, from a technical point of view, the trade that one of the live guys was looking at here, entry after we broke above what was kind of when Europe was coming into the marketplace, added to some of the position when it came back to the R1, and then taking it all the way to R2, coming out of some of that position, and you can see this triangle that he was focusing on technically to execute that trade. And I know, Michael, you've had a couple of different takes on the similar type trade this morning. So an ascending triangle 1 minute, I think that was what you were talking about 20 minutes ago or so. So there's definitely been a couple of things that have offered this morning, but have been more technically led, I'd say, rather than anything particularly news driven. One thing here is just wanted to have a quick look at the pound. And notably, it was this price action here that occurred after Mark Carney spoke at 4 PM. Now I'm looking at a 60-minute candlestick here, and it looks like a fairly sharp move, but it was a bit of a slow burner actually. And first of all, let's have a look at the reasons why the pound fell. And I think to put that into context, really, you need to look at where the pound's come from. And it's seen a phenomenal rise that's meant that quite a lot of big banks, HSBC being one from yesterday, have had to rethink their strategy on the pound, and they've changed their end-of-year target. I think they're looking more up at 138, 139 now, comparative to what they were looking for, which is much lower in their previous forecast. So a lot of people being caught a little bit by surprise. Obviously, Brexit has gone into a bit of a stalemate at this point, and yet the pound continues to just edge higher. This renewed threat of the potential of an interest rate hike being brought forward has been one of those predominant reasons. And then if you remember on Friday's session, we had a really strong move. So this is where we had kind of two big events over the last couple of days. This was the first one. This, of course, was the Bank of England interest rate decision. Obviously, no change in actual policy, but the language getting a little bit more hawkish. And then this was the Friday move when Flager, the MPC member, who is a known dove, was basically talking up the prospect of the potential need if the economy remains on track to tighten policy. and so made hawkish comments which surprised the market and we shot higher. So in context, the Carney move doesn't really look that big, but let's just delve into what is it exactly that he said. And the Bank of England talk turns from pound to long-term inflationary pressure. Sterling fell as Carney opted not to toughen the hawkish language. I think that was kind of the main thing. A lot of people looking for clarification from the governor, and on the balance I'd say he was still overall more hawkish, but he did say 2 points which prompted, I feel, the initial move lower. The first one being that on his rate hike comments, in terms of the way in which these increases will come, he said would be gradual and to a limited extent. So again, as I was talking about yesterday, it's kind of following the similar playbook to the Fed's communication strategy, kind of slow and steady and cautious approach to this tightening cycle means you get this kind of dovish hike mentality almost that the Fed have adopted so well throughout the last 9 months or so. The other comment that he said, this is on the key issue of Brexit, he said there remains considerable risks to the UK outlook and that the Brexit process would weigh on the country's economy's potential growth for a period. And so those kind of more downbeat elements of his speech is what caught a bit of attention. Now, some of you might have seen me share this yesterday, but for just the benefit of hindsight for those that didn't, this was a trade taken by Piers, our head of trading, yesterday. And so a really good example of quite incredible patience, because I remember talking to Piers about 5 p.m. so he was in the trade for a good hour by that time, and I said, "Oh, it's coming to the turn of the hour. Do you think you should be taking that last one off?" And he was just there, cool as a cucumber, saying, "Just be patient, Anthony." And I said to him, "Well, that's why you're the head of trading, boss." So good example though in this trade of execution over the actual comment. Obviously this is his then monetary policy understanding, also in the context of he's understood thoroughly of what had occurred last week. So his remit or reference point is set in terms of the language that he's looking for. It doesn't quite meet his expectations, and so that gives him then pretty strong confidence to go in with some fairly bigger size. So he entering the position short with 11 lots. 11 being, as I know Fez was commenting yesterday, 11 being just quicker to execute on the keyboard shortcut for increasing the size of the trade. You can then see how he's kind of played this where the bigger amount of size is being taken off fairly early in order to lock in the initial momentum that inherently comes, the greater volatility nearer to the event itself. That then defines the low point at this 35.39. This is what I mean though by him remaining incredibly patient, because the price comes all the way back up to his entry point, but he keeps it in play and it comes all the way back down, so it comes out in the retest of that previous low, another contract, and then eventually on the third test you get the break. So obviously he knows that there's going to be some added momentum, some probably stops on the other side of that to trigger another run lower. Immediately takes one off, another minute passes, takes another one on the dip right at the low of that wick, and then holds the other two all the way down with the confidence that the market's going to take this down to that key psychological 135 handle to come out of the eventual position. So yeah, a good example there of patience, and also the scaling out, choosing key technical points to maximize the kind of trade, if you like. So that was the sterling story yesterday. We'll have a look at the calendar and see if there's anything else to look out for from a sterling perspective. But obviously with sterling, a lot of the focus is going to be at the end of the week on Friday, because that's when the markets are going to be looking to Theresa May to provide a little bit of clarity over this latest situation that she's got, which has seen her try to speak out against Boris Johnson after his Brexit comments at the weekend. He's fired back with kind of a bit of a threat of do something, or I'll resign type conversation, but it has meant that Boris Johnson has moved back into second most favourite now, behind Theresa May. If she was to, or he is the favourite actually, if Theresa May was to step aside at any point in terms of the bookies' betting odds at the moment. So whether or not this is a strategy, some have suggested for him to align himself for that. Certainly, from what the bookies are suggesting, that is the case. Some other things to be aware of. You do have Trump giving quite a key speech today, and this is something, whenever Trump is speaking, and his new coined phrase, his dealing with the rocket man, Kim Jong-un, it needs to be watched very carefully. So Trump will call for action on North Korea, Iran in his first UN address. So what is this? Well, today Trump will call on world leaders to confront North Korea and Iran in his first address at the UN, seeking a broad alliance against the two countries his administration considers the world's gravest threats. This obviously comes after his recent rhetoric that he's had individually against North Korea has been a little bit in contradiction to that of his Secretary of State Rex Tillerson, who, if you remember yesterday, was quoted as talking about seeking still diplomatic route of resolving the issue. So it'd be interesting to see his comments. This definitely needs to be watched in terms of timing. This is the Trump schedule for today. So he's delivering that address to the UN General Assembly. That'll be at 10:30. This is usually Eastern time, so that would be 3:30 in London. So something to add additional to your calendars if it's not already on there will be a Trump speech, 3:30 p.m. This is one thing though that did see a little bit of action overnight. This was in Asia. What I've done here is I'm looking at the global performance of the stock indices, and basically by change you can see the Nikkei has been a significant outperformer overnight. You had other markets, let's say, that's traded overnight, like the AEX, the Nifty in India, have been pretty flat overall. The Hang Seng slightly negative, but the Nikkei up 2%. So stark outperformer. If you look at the Japanese yen as well, that's also moved higher in terms of dollar yen has moved higher. So yen weakness. Now, why has this occurred? Well, overnight you've had some comments out of the Japanese PM, Shinzo Abe, who said he'll decide on snap Japanese election after his US trip. So a couple of details here to get you up to speed on what the situation is here in Japan is that Abe said he'll decide on calling a snap election after his trip. He intends to dissolve Parliament on September 28th to pave the way for an election on the 22nd of October, according to Japanese press. Other Japanese press has suggested the vote is probable on October the 29th. So basically a dissolving Parliament, and there's about a month kind of leeway going into the actual election itself. Now, why is he calling this election? Because this actually is him bringing forward the election, which isn't actually due until the end of next year, the end of 2018. Well, this is very much for him to seize the moment, because his opposition are in disarray at the moment over their handling of the North Korean crisis. And actually opinion polls, Abe was under quite extreme pressure not so long ago, but since this North Korean tension has risen, and has certainly with test missiles too in the last kind of 3 weeks or so flying over Japanese territory, it's seen his popularity increase quite sharply. That being that they want, again, this kind of strong and stable leader, the consistency of policy and leadership under these kinds of periods of tension and stress. And so it's kind of striking while the iron's hot, if you like, for Abe. A September poll showed that his party, the LDP, had 37.7% of the support, up from 30.7% in July. So it's a pretty substantial increase over the last couple of months. Support for the Democratic Party was 6.7%, and no other national opposition political party had a higher rating. So he would get essentially a clear victory at this point, and he can then lock in, safeguard his government running the country. So it makes sense from a political strategy point of view, but from a market's reaction, obviously the market tends to like continuity, especially in times of uncertainty on the Korean peninsula, and hence you had the positive reaction specifically in the Nikkei stock index overnight. This is quite an interesting chart here that I saw. The rationale behind a newly elected or reappointed set of lawmakers is that they'll want to demonstrate returns to their constituents around the potential election offers a fresh show of support for the administration that's overseen unprecedented economic stimulus in Japan. And you can see here, this is a representation of the TOPIX index points, and Japan's stocks tend to rise near lower house when it gets dissolved, essentially before then the lead up into the election. So you can see each time that's happened, usually it gets followed by a pretty strong move higher on those aforementioned reasons in regards to leadership for the country and its policies. Okay, having a look at the calendar, and then there's some data that we've got coming up this morning that's worth also mentioning. So 10 o'clock you get the German ZEW economic sentiment for September. As you can see here, the previous reading was 10. We're expecting a pickup to 12.5. Where would 12.5 put us? Well, not as good as we have been in recent months through kind of, I guess, Q3 of this year, 2017. However, it would look to stop what was a fairly considerable drop-off that we had in the previous month's reading. Actually, this was the lowest reading since going back to October, which was here when we printed at 6.2. And obviously, this comes in the context of, generally speaking, what has been better economic data in Europe, hence the reason why it's resulted in the opportunity for the ECB to increase their more hawkish rhetoric about their tapering plan going into next year, which we're expected to hear more details in October if we're to go off what Draghi told us from the last press conference. So these kind of data points will get some significance. I'd say ZEW is one of the more important numbers that comes out of Germany. The difference being that unlike IFO, which is a measurement of forward-looking, a soft indicator of then sentiment going forward for companies, this is that of analysts and economists. So it's more of a hypothetical models that they've derived to then forecast for the next 6-month period, as opposed to companies' actual outlooks, which is seen as probably slightly more credible from a market impact point of view. But nonetheless, keep an eye on ZEW. It's coming out at 10 o'clock. And then otherwise, that's pretty much it for the morning. Just having a look, there's no notable speakers today other than the Trump UN address that we'll get later on this afternoon. Going into the US trading hours, you've got some housing data from the US. That's probably going to be of really little significance overall in terms of a Fed monetary perspective. But then you've got import-export prices going further into the afternoon. Again, it's fairly quiet on the data front. The API crude oil inventory is, as per usual, not due until much later into the evening. So that's pretty much it. So I'd say keep an eye out at 10 o'clock for that European data. Keep an eye out for Trump later on in the afternoon as well. And obviously in the intermittent period for anything else related to North Korea. There's been a couple of oil comments, so just to wrap things up and have a look at crude, because just as I've been talking, I've been seeing the price has just been edging higher, and there has been a couple of comments this morning, so we've managed to break the high that was seen on the recovery late in the US session yesterday. So we've just got our heads above the 50-50 level to just help push a little higher. If we continue that move, then you've got yesterday's high coming in at 85, just short of R1 at 91. Comments this morning, Iraq oil minister states that there are proposals for more cuts, but he does not think that they will be implemented, but will be studied. The Iraqi oil minister does not think now that there is a need for more oil output reductions, but if there was a need for more cuts in the future, Iraq will support the consensus within OPEC. So I guess what they're saying is that maybe it won't happen now, but if there was an overall agreement amongst all of the producing nations, then they would follow suit, which is quite a big signal really, given Iraq. If you remember, Saudi, Iran, Iraq, these are the biggest top 3 producing nations within the OPEC nations. Okay, I'm going to leave it at that and let you get on with it. So any questions that you may have, please feel free to just message me in the chat room. Otherwise, have a good day. Thank you very much.